All right, testing. Okay, guys. I have not done this in a while. It is like I had to do some updates on the OBS, and at the same time, I have folks questioning about the sustainability, or could there potentially be a blowout in USDT. So before I kind of give my kind of insights or at least opinions on whether that could actually happen, first I would like to ask whether can you hear me? Okay, whether can you hear me? Is the audio okay? Is the camera, everything is okay? Because like I said, I had to update the OBS and everything. So if you all could just comment whether you can hear me before I start rambling, then in the chat section to let me know that the audio is okay, then I'll get into the video. And of course, being prepared is one of the most important things, right? I don't think that there's gonna be a huge blowout. I can't put the video in 1.5 times. I think something is wrong. Okay, I can hear you, but just caught the broadcast by accident. Audio is good. Okay, Josh and Joel, thank you so much. You can't put the video in 1. Yeah, you can't put the video in 1.5 times because the video just started, my friend. You can. It's a live stream. So if it's a live stream, you can only do that 1.5 times, 2 times faster, much later after this whole video is done. Okay, audio is good. Okay, so I'm just gonna just get into it, right? Okay, so if there is gonna be possibly a USDT blowout, okay, God forbid, because at this point of time, USDT is 74.12 billion, right? So if we have a market cap of 1.24 trillion, that is literally 50% of the whole market cap being wiped out. Okay, and I think what we kind of want to do is that we try to assess the situation and how likely that is going to happen. Okay, I'm getting a warning, guys, so give me a second. Let me read this warning. Okay, so as long as so firstly, as long as the video is running smoothly, do comment and I will check the chat in the event that the video is not running smoothly, or audio just goes off. Like I said, this is something that I've not done in a while. Okay, so back to the topic, and let's not get distracted, okay? Right now, I would say that the likelihood of a USDT blowout is quite low. Okay, but let's assume that we see signs of stuff like this happening. I kind of doubt it because firstly, USDT, although isn't it's like, okay, this has been a debate that we've been having for many years already, that no one actually trusts USDT, but it's like the go-to crypto, it's like the go-to stable coin that majority of folks use. Now, does everyone need to use USDT? I would say no. Okay, I would feel that USDT is more of the stable coin that has kind of supported and provided the main primary source of us wanting to buy cryptocurrencies when exchanges could not provide us the direct fiat option. Okay, so for folks who are very new to the channel, just to let you know, in the past we could not buy BTC, Ethereum, any kind of favorite cryptocurrency without first going into either Bitcoin, Ethereum, right? Then came the stable coins. So the stablecoin option was offered by Tether, where the company used to say that it would issue the exact amount of USDT for an equal amount of US dollars that is being parked with their reserves. Okay, that was the initial plan. Now that is no longer the case. Like, no one can validate whether or not 74.1 billion is actually in their reserves. No one can prove that, and they are not very transparent about it either. Okay, so let's just assume, right, that this is pretty much the same as most fiats, right? Not every single country can claim that their existing fiat currency is backed up by an X amount of actual tangible gold or actual tangible silver, something like that. I'm just giving an example. Now, we have we have more choices now. Now we have USDC, we have basically actual fiat alternatives, right? Fiat pairings, where you can see that exchanges provide the ability to buy Bitcoin directly, or at least most major cryptocurrencies with fiat. Like I can buy Bitcoin with Singapore dollars nowadays, not an issue. And I'm sure that a lot of folks who are in the US are able to buy Bitcoin with US dollars, right? It's very, very straightforward. You can buy in Canadian dollars, so on and so forth. There's like most exchanges, especially the ones that have been around the longest, have been compliant with their government's rules and regulations, right? Or their monetary authority, are now usually given the green light to go and allow their citizens to buy with that respective domiciled currency into Bitcoin or into most major pairs. Now, but why is USDT still popular? Don't forget, we still have a relatively buoyant, healthy, and active altcoin market. Now, altcoins are the ones that give you the crazy returns, the crazy gains in a bull run, which is not now, but when a bull run returns, usually you want to get into the small caps, and the small caps are usually paired with either BTC, Ethereum, USDT. Okay, now why did even USDT become available? I think it was more of the taxation standpoint, because the moment you go into US dollars, right? Okay, so I want to backtrack a little bit. At the time, let's say 2 to 3 years ago, there was practically low to non-existent taxation on your capital gains on crypto. Okay, so if you made any profits on cryptocurrency, it was your choice whether you wanted to declare or not. Okay, so the USDT, being a cryptocurrency as well, would provide that that kind of, we'll just say, escape, right? For you to not need to declare until you come back to the US dollars. Okay, now in Singapore, there is no capital gains tax as of now. I think it's pretty much the same as Dubai. It's pretty much the same as I think Switzerland as well, where there's no capital gains tax on your crypto. Okay, so that's why a lot of crypto billionaires have moved to Dubai for this reason. Switzerland or Singapore, okay, depending on where you're at. So the USDT has been that kind of safe haven. Okay, it's like a digital safe haven. Instead of opening a BVI account, for example, which is the British Virgin Isle of Man, you have your Seychelles, where it's offshore, there's no taxation or very little to no, you can't really, it's not that it's illegal, okay, it's just a way of companies trying to move their money around. That's the usual way, right? But USDT, or at least a stable coin, right, has provided that. Okay, now back to it. So in the event that, let's say, we have a attack on USDT, the same thing that happened in a way, I feel that it's very, very different, right? Because USDT has never provided ridiculous returns for staking USDT. The only returns that you would get is staking USDT through a centralized exchange, okay, and you're getting a very reasonable rate of return. There's nothing crazy about staking USDT, guys. It's in fact very normal, okay. Now, returns are calculated with a slight level of complexity, but I don't think it's that complex. It's very simple, as I mentioned in my previous video, if you had watched the UST-Geddon or the Luna-Geddon, right? Okay, firstly, Luna going up in value and USDT, UST going up in value are kind of like, hand in hand, okay? But for USDT, for it to kind of gain value, firstly, it's quite straightforward. It's more printing or minting of USDT into the market, okay? And whoever purchased that USDT is obviously gonna buy either Bitcoin, altcoins, Ethereum, whatever they fancy. Or they're just basically maybe just staking it. You never know. Because at this point of time, the market is relatively attractive to some, but mostly bearish for the majority. Okay? So if let's say you were someone who had the USDT and you are gonna just stake it, right? You're gonna get maybe 5% to possibly at most 6%, which is still reasonable, right? Because if you look at Binance, for example, if you were to borrow USDT and if you were to do any longing at this point in time, long or short, or mostly long, because you need it if you are gonna buy cryptocurrencies on margin, your borrowing cost to you is about 24%, up to 22 to 24% per annum if you're the lowest tier in your membership, right? This is just Binance, right? At this point in time, I haven't explored other exchanges or how much they are offering, but I'm just saying, let's just say you're being offered. Sorry, your borrowing cost is 24% because your interest rate, or at least what you are supposed to pay every hour, is I think 0.02%, okay, per hour for borrowing USDT. And it is obviously dependent on how much you are borrowing. So let's just say the borrowing cost, okay, is 24%, and you as a staker just earning USDT returns on a per annum basis is only maybe 5 to 6%. So can you see that there is a difference of so 24 minus 6 is about, say, 19. You have a 19% to the exchange. There's a 19% return to the exchange for just doing this very simple service, okay? And you as a staker, you're getting 6%, 5 to 6% on your USDT, which is very, very reasonable. So there's nothing crazy that is happening, and it seems sustainable from that point. Now, for USDT to have a complete blowout, the chances are very much lower. But let's just say that in the likelihood that were to happen, okay, firstly, most of the value, right, you can see if I shift over to Masari, okay, if you go and look at Masari at this point of time, okay, it will look very bad. You're looking at 50% of the whole overall crypto market losing value, okay, and majority will come from Bitcoin, okay, because Bitcoin's market cap is 556 billion. Ethereum is at 237 billion, and third place you have 74.11 billion in terms of actual tether. So I wouldn't say it's that big a deal. Actually, no, you will not lose 50%. You will lose lesser than that, and the reason is very simple. Like I said previously, the only way that you would get in was through either buying USDT, BTC directly, or Ethereum. Now it's more diversified. So when you are having a more diversified way, you have more diversified ways or avenues to buy cryptocurrency, right? It's more or less like how decentralized a network is. The likelihood of an attack on one particular cryptocurrency, although disastrous, will not decouple the whole market. So I think one of my clients actually asked, if USDT was to have the same situation or a blowout just like UST, will that cause the whole market to be wiped out? I told this client straight up, no, that will not happen, because it's more diversified. The market is more diverse now. We don't have to worry too much. And if USDT were to blow out, I'm pretty certain USDC or a combination of a new stablecoin will appear that will be regulated, right? Or exchanges will do completely away with a stablecoin altogether. But I believe that you can't do away with stablecoins completely. You will still have a stablecoin alternative provided by that respective exchange, because firstly, it is still decently good revenue. At the same time, you may not want to cash out into fiat immediately. You may want to just hold in stables. Why? Because a stablecoin usually has more pairings versus the straight up fiat option. Okay, if you notice and you've been trading cryptos a while, you would notice that your fiat options for crypto is no more than 10. That means you have very little in terms of the opportunity to buy speculative altcoins. You can buy the major pairs, but you cannot buy a single speculative cryptocurrency. Whereas if you were to look and click on a stablecoin tab, for example, the USDT or USDC possibly, you would see more options, okay, for you to start trading or even accumulating. Now, the problem with speculative tokens is that the moment the exchange notices that the volume for those cryptocurrencies are getting lesser and lesser, they will delist it. And if you decide, if that token gets delisted, right, the only way that you can kind of protect that token, okay, is hope for, you would have to transfer to a ERC20, okay, or that particular network's form factor or wallet to kind of hold the tokens. Okay, effectively, when a token gets delisted, it doesn't necessarily mean that there's no value. Okay, that value will transition to the actual community, its developments, and may get relisted in the future. But also, there's a very high risk of it not getting relisted at all. Or it could be actually traded in another more speculative exchange, for example, like a HitBTC or whatever kind of DEX, all right, a decentralized exchange. Whereas centralized exchanges are all about bottom line profit and commissions. It has to be high or at least reasonable volume to have them continuously listed on the exchange. Okay, so that's kind of like why stablecoins still play a very, very significant and important role in the crypto market. Now, like I said, a blowout, we are here to also protect. You see, a blowout at this point of time is not good for everybody, okay? Because I think a lot of people did not have the opportunity to cash out in the highs of the market. Assuming you are still holding, okay, let's just address, in terms of where you're at in your portfolio. Let's say you are someone who has a portfolio that is at a loss, okay, and you have an X amount of stables. You have USDC, you have USDT, and of course you are holding whatever kind of altcoin or cryptocurrencies, where it be speculative or top 20, top 10 cryptocurrencies. Okay, you're gonna be you're not going to be in a very good position in the event that there's a USDT blowout, because firstly, the USDT will go to zero. Okay, this is a very hypothetical example. Okay, I'm not saying that it's going to happen, but it's a hypothetical example. That particular portion of your portfolio, which is in USDT, goes to zero. Okay, the value of the cryptocurrencies that you are holding are also going to take a significant hit, especially if majority of their liquidity is from USDT, right? But if the majority of your let's say you're holding Bitcoin, and I mentioned Bitcoin is more diversified now, meaning to say that a lot of people are trading on and off the market, right? When you're trading off the market, sometimes you're just buying directly with we'll just stick to US dollars for simplicity, right? You can buy straight up. People will definitely be willing to do a trade with you peer to peer, right, for US dollars and Bitcoin. It's straightforward. That's considered off the exchanges. On the exchanges, you can do it with fiat, which is USD, stable coins, and whatever altcoin. It's more diversified. So if you are having a larger portfolio of Bitcoin or Ethereum, okay, you won't really see much of a drop, or you could see a significant drop, but you see a quick recovery. Because if, let's say, you suddenly see the news of a USDT blowout, firstly, the prices of all cryptocurrencies will fall quite drastically. But it becomes so attractive to pick up Bitcoin and Ethereum that you will also see a relatively quick recovery. Okay? Now, the thing is that it's always a question mark. How much stables should I hold, right? And this is a very challenging question because, like I said, if you are someone who is in a country that has very high capital gains tax for crypto, you kind of have to bite the bullet, right? You kind of have to bite the bullet, because I think exchanges these days are very, very transparent about their reporting. That meaning the moment that you go into USD, right, that is a realization of profit that you could have made prior to that, even though you are holding a loss, right? Like literally like right now value you are at a loss, but perhaps previously you were on a profit. So it depends on your reporting. So I'm not here to give you taxation advice, but be very, very mindful and careful. But then again, you also don't want your stablecoin going to zero. So where could you go, right? So I feel that hiding or placing your assets, right, in Bitcoin or Ethereum is still a better way to go, right, compared to you going directly back to fiat. I mean, that's just my personal take, right? And that's kind of like what I would do if I was having a portfolio at a loss at this point in time, and I kind of don't want to, do any declaration on the holdings or say that I've really cashed out, because in essence I didn't really cash out anything. Let's just put it that way, okay? Now, if you are someone who did take profits, right, and now you're holding a good amount of USDT, okay, you're holding a good amount of USDT, you're holding Bitcoin, you taken a little bit of a hit on your Bitcoin and your Ethereum, but you're still doing okay. That means your crypto is still in profit. I think it's about time to kind of ask yourself, right, what should you do effectively with that money? So I've always mentioned that when you take profit from your crypto portfolio, you have to deal with the tax that you might have to pay, the capital gains tax that you might have to pay. But it's rather that you pay it off, right, and you are free to do whatever you want with the balance after you have paid the taxes. I think that is a very good thing to do. Okay, I mean, it's no avoiding it, right? Unless you're telling me you're gonna be willing to just hightail, give up your US citizenship and move to Dubai or something like that, or even in Singapore. Okay, but I would say that you want to do that. Okay, at least you lock in the net gain after taxes, and you can go and look at clearing your debt, further reinvesting into perhaps the stock market, or at least, when I say reinvesting, obviously it's not to put one shot all in, but to come up with a diversified plan, right, with your financial advisor on how you can, start moving that money around, diversifying. So diversification is actually one of the other alternatives if your crypto portfolio is in profit. Okay, it's really very straightforward. Now, the third option, right, is that you do not care about diversification. You are still here to stay. You want to be in crypto. Stablecoins is your option. So which stablecoin? I would highly suggest USDC. Okay, USDC is an alternative. Okay, where a good alternative, or only regulated exchanges that have their own stablecoin. So for example, who has a stablecoin within their exchange? So for example, GUSD. Okay, which is Gemini. You have Coinbase. I know Coinbase doesn't have their own stablecoin. They use USDC. I'm giving you these examples. If you are still able to access and use Binance, there is BUSD. Okay, so these are basically the alternatives, right, that you can consider if you want to stay in crypto only and you are worried about USDT having that potential blowout. But let's not be too concerned. Let's look at things from a more macro standpoint, and how likely is that attack or the downfall of USDT going to happen. So I already given you these three options for your portfolio. You can execute. There may be micro strategies that you can have in place, but at this point of time, be very mindful if you're going to be staking your stablecoin. Be very mindful of the returns. How people fell into the trap of the UST was they didn't realize the significantly high rate of return on the UST, right? That was completely a red flag for me. Why I didn't even bother with that stablecoin, because I felt that it was really running like a Ponzi. Always question the gain, the rate of return. Like, how is that rate of return sustained? Okay, that's one. Now, two, look at the whole mechanism, the whole ecosystem. There has to be something that is monetized. If the market demand is so poor, how on earth would a return be sustainable? Okay, always question that. So now that you are kind of like identifying all this, and if you're holding USDT, you're holding USDC, or whatever stablecoin at this point of time, look at their staking reward. Now, it's okay for short-term higher rewards. That means sometimes an exchange is creating a campaign to shore up liquidity for a given period. So they may give you a little bit higher, okay, for maybe 1 or 2 months. That's still okay. It's promotional. But when it's too long-term, you more or less know that's going to be a Ponzi, guys. Really straight up, I'm just going to call it out right now. Firstly, I don't see the market being so active that the demand is so strong that you can justify 20-30% returns on a stable coin. Okay, even for cryptocurrencies, right, which is very popular to have DeFi, your DeFi mining or whatever you call it, it's all giving you tokens, guys. Tokens are dropping 20 to 50% over a given period. No matter how high the staking, the APY, it doesn't matter. You're getting garbage. You understand? You're getting garbage. You're just hoping that when you collect enough of that garbage, it turns to gold in a bull market. That's really the truth. Everybody kind of roughly wants to gamble that, okay, I put in a little bit of money, I put it into this staking contract, a DeFi staking contract, right? Or a DeFi swap. And hopefully when I stake this token and I do some liquidity pool provision, I get a very high staking reward. And when the market returns or when the developers decide to come up with something awesome, the tokens suddenly gain in value. So this is a very this is kind of like one of the ways people have become rich, but it's also very degen, right? It's very degen. It's a degen way of making money, but it does work in the right market environment, but it's a very poor strategy in a bear market environment. Okay, so now I just see that for the fact that it's a bear market environment, be conservative with your financial decision making, question a lot, speak to the people behind the projects that you're investing in, not the community, guys. Because like I said, communities can also be very, it can be manipulated, meaning that they can be actually, the team themselves, right? Or they are hired community managers that are there to make sure that, the project runs on a positive note. Now, you have to really do a lot of investigative work because it's your money. If you're not taking your own money seriously, I feel that you should not even be investing. At the same time, this kind of all-in strategy all the time too early is one of the worst moves ever. Always go dollar cost averaging strategy. Always just go slow because there are just so many assets in the market at this point in time. Why do you need to rush into crypto alone, right? So that's just my take. Have a good weekend, guys, and see you in the next live stream.